Hello, my name is Sally Gimmon, and I'm the owner of the trustisyou.com, and I'm going to go live on Zoom on February 13th at 4 p.m. to talk about the Spendthrift Trust and how you can save federal income taxes. Between now and then, I want to show how I'm going to save people save money. This is going to help so many U.S. business owners, U.S. 1099 income earners, and U.S. investors save federal taxes legally. So few people have ever heard of the Spendthrift Trust. It is my duty to teach this to as many people so they too can save federal taxes just like I do. I personally have both the business trust and the beneficial trust because I have I have three online businesses and I'm a real estate investor. The Spendthrift Trust is legal, copyrighted in the IRS Tax Code 643B. The full name of the trust is Irrevocable, Complex, Discretionary, Non-Grantor Spendthrift Trust. Irrevocable goes from generation to generation. Complex, it can hold money day to day, week to week, month to month, year to year, decade to decade. Irrevocable, complex, discretionary. Whoever is the trustee can make the rules for the beneficiaries. Non-grantor, this makes the trust 100% private. Someone who is not a beneficiary will sign up to be the settler to start the trust and to be the trustee for 5 minutes and then sign themselves away. If you can't find someone to do this, either myself or somebody else from the law firm will do this for you free of charge. It's not a headache or a speed bump. And then the fifth element, the spendthrift, has been in front of the United States Supreme Court on 2 different occasions, and both times the Supreme Court has favored it. Bit of history. The Spendthrift Trust comes from England way back when King Henry VIII, the famous king for chopping off his wives' heads, started the Church of England. It became contract law, came to the United States while we were still a colony. The law firm I work on behalf of inherited a trust that turned 350 years old in 2023. Our current tax code went into effect February of 1913. 110 years ago, and has only grown bigger and bigger and bigger and bigger since then. The very extremely rich families of that time, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys, made sure this was in the US tax code so they could continue to save taxes. If they can do it, you and I should be able to do this too. Now, with the trust, it's broken in two. The business trust is for US business owners and 1099 income earners. You will save at least 90% on your federal taxes year after year, generation after generation. 43 states have state income taxes or personal taxes that you can also save if you are in the trust. Beneficial trust is for any and all U.S. investors. You will save the following 5 taxes year after year, generation after generation. You will no longer pay short-term or long-term capital gains on any profits. You will no longer pay interest income if you're a passive investor, doing seller financing, creative financing, the BRRRR strategy, subject to real estate, have notes, or if you're a forex investor. Forex investors, you're being taxed twice, interest income and capital gains. You will no longer pay dividend income taxes if you are active in the stock market, if you're a day trader, if you're doing commodities trading or futures trading. If you're an options trader, you need this trust. You're being taxed 40% on your profits for a year or less, or 60% on your profits for a year or more. And then you will no longer pay rental income. Yes, you can take depreciation over 27 and a half years. Yes, you can take cost averaging over 7 years. Yes, you can, it could be short-term rental like Airbnb, traveling nurses, vacation rentals, or long-term rentals like 5 doors, 20 doors, 30 doors, multifamily, apartment investing, or commercial investing. And you will no longer pay royalty income taxes. If you are an actor, an actress, if you're an author, if you're a playwright, if you're a musician, if you're in the NFT world, NFT crypto, NFT real estate, NFT artwork, you have intellectual property. I sell this trust. It is copywritten. I don't pay royalties on what I sell because I have both the business and the beneficial trust. If you have mineral rights like oil wells or anything else. Today's thing I'm going to show you is a client who contacted me because they saw one of my YouTube videos. I asked, how much money were you paying in 2023? He literally answered my question. In 2023, he's going to pay $143 in rental income taxes. I do not know if he's doing cost segregation. I do not know if he's doing depreciation. We just had the conversation about $143. He and his wife work full-time and live in Illinois, Champaign, Illinois. So what we're going to do is we're going to lower their federal taxes from 24% down to 22%. I cannot touch their W-2 income. That's why they're going to be at 22% with W-2 income. They're going to make a decision if they're going to continue working or if they're going to live off the rentals, because they're going to be saving so much money. So that's going to be lowered. And then with the $143,000 at 22% tax rate and beneficial trust, we will save them $31,460 in 1 year. 1 year. So adding $32,699 for lowering their taxes from 24% down to 22%, taking that out of their LLCs and into new EIN for the Spendthrift Trust that files a 1041 tax return. So it's no longer affecting their 1040 tax returns. This is where the difference comes from. So they're going to save $31,460. And since they're in Illinois, they're also going to save on state taxes. Their taxes are 4.95%. So again, from 24% down to 22%, it's an extra $7,708 savings for a full year. So they contacted me in January. It won't be a full year, but almost a full year. They're going to save $71,237 in 2024 numbers. That's a lot of money. Now, looking at this, they're going to have to make a decision. Hey, do they want to continue working 40 hours a week? Both of them are working 40 hours a week, or one of them quit their job. That's a decision they have to make. That's what's going to lower their taxes from 22%, possibly down to 12%, and save them even more money. With the $71,237, that is their money. They can buy more rental property. They can pay off their mortgage. They can buy a new car. They can help a family member. They can give to a charity. They can start a charity. It's whatever they want to do with their $71,237 and $2,024 that they're going to be saving. I am inviting you to either set up a 30-minute tax breakthrough session with me at www.thetrustisyou.com/scheduling, or please come to February 13th at 4 p.m. East Coast time on Zoom to talk about how to save federal taxes legally. Thank you for watching this. Have a beautiful day and start saving money, because it's your money to be saving. Take care. Bye-bye.